Hey there, friends. My name is Phil Goff. This is the Home Finance with Phil channel. This is today's weekly market update. It is February 29th when I'm recording this, probably March 1st when you're watching this. Welcome to the channel. Glad you're watching. We just take a look at the market conditions, seeing what's going on. The background behind me has changed a little bit. I'm coming to you from out of town. Today I'm headed back from a conference. So that in mind, this is going to be a little shorter than normal. I'm sure you're all just, really upset about that prospect, right? But let's go ahead and jump into the slides. Okay, so the mortgage rates are hanging out right around the 7% range. Mortgage News Daily says the average for a 30-year fix is 7.15. Obviously, you can see here the VA and the FHA have gone up a little bit lately in the 6-7 range. You can see on the chart that we're just kind of hanging out, right around the beginning of February. Everything's been a little bit up and down, but we're right in the same area. I mean, nothing's really changed that dramatically. We have seen some green the last couple days, which is nice. We just want to see some positive movement, but maybe we're done with the negative movement. Just some ideas. We've talked a lot about the Federal Reserve and making changes. When are they going to come out and like lower the rate? Waller, who sits on the Fed, still is saying that he feels like inflation is too high. So wants to see inflation cooling before they cut the interest rates. You can see over here on the side on the chart. So 3.9 is where we fit with items that don't involve food and energy. Food and energy is actually doing pretty well. So when you include those, we're looking at about a 3.1 rate. You can see back in January 2021, that's kind of where they want to be, right? They want to see that 2% holding zone. And when they feel like they're around the 2%, that's when we start looking at cuts. There's not really any signs to say that we get the 2% like really fast, though. I mean, it has come down quite a bit. I think people are expecting them to lay off a little bit, but if that's what they got in mind, that's what they got in mind. So it might be a little bit longer of a wait than we originally thought. We were originally saying, hey, by June or July, there's going to be like 100% chance that they will cut the rate. Maybe that's more like August now. I mean, I don't know. I wish I were Nostradamus or I had a crystal ball. I am not. So if you find another lender that's willing to give you that in a surety, good luck with that, and hopefully that happens for them. Um, and just again, not many slides, but I wanted to talk about this just a second because you can see that with all these changes, all these interest changes, in the inflation, debt's just kind of going through the ceiling. Total household debt has rose by 212 billion in the fourth quarter of 2023. Now that is with Christmas and things like that, right? And along with that is credit card balances. They've increased 50 billion over the quarter, and mortgage balances rose 112 billion. So all these things considered, it's just tough on people. You can see from the chart, just kind of going up and up and up and up and up. So as these rates decline, maybe it'll help people out a little bit. They can do some maybe like cash out refinancing and kind of help pay off some of that extra debt and keep their payments still pretty low or very comparable to where it's at. And I think this is applicable for all of us in real estate because if people have options, they're more likely to move and do things of that nature. But right now, they're probably stuck because you get in that much debt, you can't do a whole lot with it. Um, that's it. Ending on a happy note, right? Yeah, yay. All right. So this is me, Home Finance with Phil. This is my information. I will be around this weekend, as always, if you need us, so give us a call. And as I said, I'm keeping this one short. So that's it for today. Hope you have a wonderful weekend if I don't hear from you. And if I do, yeah, don't be a stranger. And we'll talk to you later. Thanks.